Thank you, Mr. Chairman. First, I'd like to welcome my former colleague, Mark McWatters. I worked closely with Mark on TARP oversight, and he was always smart, thoughtful, and principled, and I strongly support his nomination to the Credit Union Board. Dr. Fischer, after you were nominated, we met and discussed too big to fail, the fact that the big banks are growing bigger every day, and whether cutting their size would help reduce overall risk in the economic system. Now, I'm concerned that the mega banks not only have the capacity to tilt the financial system, but that they also have the capacity to tilt the political system. You know, we've learned that as big banks get bigger and bigger, their lobbying power and influence in Washington also tend to grow. That means big banks can often delay, water down, or even kill important regulations. So size can have ripple effects everywhere, and for that reason, I think it's a mistake to talk about size without considering how it affects the ability of government to enforce meaningful regulation. A century ago, when Teddy Roosevelt and other progressives worked to break up the giant trusts, this was a big concern, not just the economic impact of size, but the political impact that came with size as well. So, Dr. Fischer, you have a great deal of experience as an observer and as a participant in the financial system. Is this a point that you've thought about, and do you think it's possible for large Wall Street banks to amass too much political power?
Senator, thank you. I went back from our meeting and thought about this issue and sort of rang some bells among me, and I did go and look at a speech I thought I'd given at the Jackson Hole Conference in 2009. I discovered the following, which doesn't answer your question, but it's on the same point. It says, even for the largest economies, there's a case for discouraging financial institutions from growing excessively. While it is clear that there are economies of scale in commercial banking up to a certain point, it's less clear that these economies of scale continue at the very largest banks. And it is even less clear that there are serious economies of scope in the financial sector. That is, there is little evidence that the financial supermarket view, by which the end of Glass-Steagall was justified, leads to more efficient and cheaper provision of financial services. So I didn't have to go into the political side of the issue. As a citizen, I think this possibility you raise is one which seems natural. When I went off to be governor of the Bank of Israel, a friend gave me a copy of later Justice Brandeis's book, Other People's Money, and that was a powerful, very powerful attack before he became a justice.
Well, we have much to continue to talk about. But, Dr. Fischer, let me ask this question in a different way. You know, many big banks are well represented in Washington, but the connection between Citigroup and Democratic administrations really sticks out. 3 of the last 4 Democratic Treasury secretaries have Citigroup ties. The 4th was offered but turned down, the CEO position at Citigroup. Former directors of the National Economic Council and the Office of Management and Budget at the White House and our current U.S. Trade Representative also have Citigroup ties. You once served as president of Citigroup International and are now in line to be number 2 at the Federal Reserve. Now, I know that Citigroup has some very smart people, and I know that private sector experience can be very important in government service. When I set up the new consumer agency, I hired many people from the private sector. But I also think it's dangerous if our government falls under the grip of a tight-knit group connected to one institution. Former colleagues get access through calls and meetings. Economic policy can be dominated by groupthink. Other qualified and innovative people can be crowded out of top government positions. So the question I want to ask you, Dr. Fischer, are you concerned about the revolving door between recent Democratic administrations and Citigroup, either in terms of policy or in terms of just public perception? Or do you think there's nothing here to see?
Well, there is obviously something to be worried about, but I think we ought to look at the other side of this. In my case, my 3 years at Citigroup were the most important element in my education that enabled me to be an effective supervisor of banks, which was one of my duties as governor of the Bank of Israel. Without that experience, I would have come to it largely with an academic background, without ever having seen the inside of a bank, or furthermore, without ever having worked in the private sector. I thought that that experience was extremely valuable. When my people who worked with me would explain to me the theory of what was determining the exchange rate, I could explain to them, guys, I've seen what determines the actions of the guys who operate in the foreign exchange markets. It's not what you're talking about.
Dr. Fischer, because we're over time, I just want to be sure, though, that we're drawing in on the same point. The point I was trying to make is not whether or not private industry experience is important. I would readily acknowledge that. As I said, I hired people when I was setting up the Consumer Financial Protection Bureau, and having private industry experience was one very important qualification. The question I was asking about is the tight connection between the same institution and the government, and whether or not we need more diversity in that.
I think diversity is always worthwhile. It's true that I worked at the same institution as some of the people now in government. We were not colleagues at the time. They weren't there. I was there earlier. I left in 2005 after 3 years on the job, and I know the people, I respect them, but there are people from other institutions whom I also know and respect very much, and I don't see that as a particular problem, at least in my case.
Well, thank you very much. I appreciate it. I appreciate your service. I do think it's important that we continue to talk about size and how it not only can tilt the economic system, but also the political system and how this works. Thank you, Mr. Chairman.
Senator Schumer.